Thanks, Garrett. Appreciate you walking us through maritime and kind of the upside with respect to the value drivers at Hammerdown. Next up, we're going to do a quick fireside chat with the Executive Chairman, Mr. Richard Williams of Bunker Hill Resources. Welcome to the stage.
Feels a bit close.
Alrighty. Thanks, everyone, for sticking around. As I mentioned previously, we have Mr. Richard Williams, Executive Chairman of Bunker Hill Resources. Thanks for being here. And I just figured we could kind of start and kick things off by giving the audience a bit of perspective on the asset, on the company, where you are within the development framework, and then kind of the strategic location of your asset, Bunker Hill, within the Silver Valley in the Panhandle in Idaho.
Okay, very quickly at a high level. We're a development project going into production in the next 12 months. We'll be producing 2 concentrates, a zinc concentrate, around about 50 to 60,000 tons of that, and a lead silver concentrate, 30 to 40,000 tons of that we'll be driving to Teck's Trail smelter. When in production, over our 14-year life of mine, as we look at it at the moment, the average EBITDA on conservative prices will be round about $45 to $60 million, depending on how much silver we're mining relative to the zinc. We're currently valued at around about $50 million. So if you imagine us going into production and you use a base metal multiple, you can see that when we're in production, there should be a pretty handy uplift. But we're a polymetallic mine, and the more silver or galena we can mine relative to the spharolyte, the more silver we'll produce. And Bunker Hill ran for nearly 100 years and had its own smelting operation on site, and was shut down in 1980 for environmental reasons. It couldn't keep up with the very good laws passed by Richard Nixon and others in the 1970s. Became the largest mining Superfund site, was completely cleaned up by the EPA. This, of course, crushed the local economy and also removed all the surface facilities around the mine. And so over the last 5 years, a team of us, primarily ex-Barrick, have come in and partnered with companies such as Teck and are building the facilities and have a 12-month plan to get it all into production from now.
Fantastic, fantastic. You mentioned your market cap, around 50 million. And then you mentioned Barrick and the team behind Bunker Hill. I'm just curious as to what attracted you to the project post your kind of COO tenureship at Barrick between 2015 and 2018. What were the attributes of the project that attracted yourself and the team towards Bunker Hill? Okay,
thanks. I spent time as Chief Operating Officer of Barrick, as you just mentioned, hired in by John Thornton, and then stepped down when he bought Mark Bristow and Randgold. And a number of us who'd been working together at that time decided we want to find a distressed project that we could bring into production in North America and have it as the base of a new American mining company. The key guy, although I'm chairman, as always, the key guy is the CEO, a guy called Sam Ash, who at age 38, I gave the Lumwana copper mine to turn around, young age to do that, and it was losing $1 million a day back in 2016. And Barrick didn't have any money to provide him. We were focused on paying down debt. And so him and a very remarkable team that came from the copper group turned that around brilliantly in 12 months, while also doing the early work for what's now become the Lumwana super pit. He's a real superstar. Such a superstar, in fact, that I nominated him as my successor and then sent him off to London Business School to do what I jokingly refer to as a master in corporate politics before he came up to the head office. But while all that was going on, John bought Randgold and we stepped down. During COVID, we were reviewing all sorts of things, and at that PDAC where we all caught COVID, Sam and I shook hands. He went down, bought a house 25 minutes walk from the mine gate, and we started work. Into there have come a number of others, not just from Barrick. Our general manager, Tom Francis, came from being the ops manager at the Kennecott mine. Mike Iselin, our processing guy, ran all of Barrick Nevada's refractory processing plant, and one can go on. I'm very proud of the quality of the technical team that have all moved into Kellogg, Idaho, or its environs, Coeur d'Alene, to lead not just Bunker Hill, but be the foundational team for the expansion of the company thereafter. Once we've got over this first brand-proving hurdle with very, very limited amount of money. The capital markets are tough for little operations like ours, and turning around an asset and being the first mine in North American history to restart in a Superfund cleanup site. All of these are big goals, and on the assumption the team can do it, we believe that we'd have proved our credentials as a team, and then seek to expand Bunker's value, but also beyond that.
So we'll get into the expansion potential beyond the current 14-year PEA and the 5-year PFS, but I would kind of like to touch on the strategic significance of the asset, where it is located within the Panhandle, how that kind of feeds the onshoring mandate with respect to the Trump administration, zinc-rich, silver-rich feed going up to Trail and then coming back down to the U.S. for strategic stockpiles. Can you kind of speak to the strategic significance of the asset, again, being a previous Superfund site within the kind of North American scheme of critical metals?
Sure. I zoom, orientating everybody into Bunker Hill's in the Silver Valley, Idaho, around about 30 miles long, and in the Silver Valley, Idaho, which produced 1.3 billion ounces of silver since the 1890s, from underground mines primarily. You've got Hecla's Lucky Friday, you've got Tom Kaplan's Electrum Sunshine, you've got USA Silver's Galena, and you've got Bunker. There are a few other small properties. When we're up and running, we'll be the largest processing plant at 1,800 tons a day, with plans to go to 2,500. Now, where does the concentrate all go for all of those operations? It all goes to Teck's Trail smelter, just 7 miles north of the American-Canadian border in British Columbia. That smelter's run for nearly 100 years, that metallurgical complex, very well established, very effective, very large. Its primary feed comes from Teck's Red Dog mine, the world's largest zinc mine at the moment, up in Alaska. And its byproducts, its products from that Trail smelter are very interesting from a U.S. strategic perspective. It produces approximately 50% of the germanium and gallium and 100% of the zinc stockpiled by the U.S. Defense Department today. It should be seen as the discussions that Teck, I'm not Teck, has with the U.S. government, be it Department of Energy or others, as a piece of strategic vital ground for the United States government. If you look at it in the competitive sense, obviously we're all sitting in this particular moment in history where the US and Canada have taken views on each other with respect to trade, but we all know that there is an integrated metal supply chain in North America, that if there wasn't a border or there wasn't a dispute associated with the border with respect to tariffs, would move quite smoothly. So Teck's Trail smelter is really important for the US. It's also critical for Teck's zinc business. And although Red Dog is open pit, and in 6 years' time, as they declare it's going to go underground, they need to find reliable feed for it, so that firstly its economics work, but secondly it can continue to support the US and the Canadian metal supply chains. Now, they used to have Pend Oreille mine in Washington State, which shut 6-7 years ago. We actually bought from Teck their processing plant, moved it to site, and refurbishing it. And Pend Oreille was really useful to them because it produced really clean concentrate. And Bunker Hill will produce really clean concentrate. So although we're not huge, I mean, 100,000 tons of this stuff is not massive, and with respect to what Trail can do, we can provide clean concentrate that allows them to blend with other things and make better money that way. So the relationship between us and Trail is vertically integrated. Teck has not only provided us the processing facility or elements of the processing facility that we're putting in place. They've also, as we announced in March, are putting in a lot of equity into the business, and will be approximately, once an equity deal, which is ongoing at the moment, is closed, approximately a 24% shareholder of Bunker Hill. So our relationship with Teck is, I wouldn't call it father and son, but it's not far off. They're the big guy. We're just one of the components of a supply chain that they own, and the commercial relationship is very, very strong indeed. So there's a little bit of America, a little bit of Teck in there.
Right. Right.
Yeah.
So you talk about the supply chain, right? And I'm just kind of curious your view on if we were to see Teck have more kind of strategic interest in vertically integrating and asset ownership down the supply chain with respect to zinc. Because to your point, Red Dog, the expansion would have to go underground. There's been no FID on that just yet, although it's 6 years ahead. There's fewer zinc assets coming to market within North America, especially within Western Canada. You think Foran, McIlvenna Bay. Outside of that, Teck has interest within the San Nicolas project with Agnico Eagle. But do you see an interest for smelters to have more ownership of zinc assets, similar to what we've seen in the copper side, because TCRCs have been so recently depressed?
It's a good question. And again, I obviously can't speak at all for Teck and its strategy. I'm just sort of taking a step back and saying, let's have a look at the history of refining in North America or even globally. And let's compare a little bit with China. China uses government money to fund loss-making smelting and refining capacity because they see refining and smelting capacity as strategic. It doesn't need to make money, it just needs to be disciplined. In the West, as a good capitalist country, no one's going to invest in anything unless it makes any money. And so what happened to refining and smelting in the US in the 1970s when those environmental laws came in? The standards required of refinery was more than the people who were running them could afford, so they all shut down. That was fine for the US because it could just buy its metal from overseas, wherever it may have been. But we're now in a position where you have excess smelting and refining capacity in China that essentially squeezes the margins down for anybody else that owns a refining and smelting operation in the downstream. There's a role for government in that, by the way. If we decide that refining and smelting onshore within the United States is important, and buddies of mine running alumina smelters in Louisiana or elsewhere are all in and out of the same US government office as I am, we should look at the US and the Canadian government, and I know in Quebec they're doing a bit of this, to look at actually how government money can sensibly keep those things up and running. That's the government question compared to China. With respect to us, private sector producers, whoever owns Trail Smelter, just use that as an example, which is Teck, wants to have as much reliable local feed as possible. And there's a number of, if we just use the polymetallic but zinc-heavy projects that are around in North America and Canada in particular. A number of the speakers over the last few days have been talking to those. If you could bring all of those into production, then you're more than happy going to keep the Trail Smelter and others up and running. But as we know, there's all sorts of complexity relative to each particular concentrate, impurities and so on. So the relationship between those who own the smelter and those who want to secure the feed, well, they're often the same thing. So hence why Teck has put money into us and supported us. And hence why also they've done the same to one of our neighbors, USA Silver, in the Silver Valley. That's about 8 miles away from us. So you're seeing a major that owns a refining putting money into the upstream, which makes absolute sense. For Teck, they need to keep that operation running. For the US government, they need to get that operation running.
Yep, it's strategic, 100%.
Yeah.
So we're just coming up on about a minute left, Richard. Thank you for walking us through the strategic significance of the asset, of the location of zinc vertical supply chains. I'm just curious if you could kind of provide to the audience kind of a 30-second outlook in terms of catalysts for the company over the next 6 to 9 months, and what investors should be looking at.
Okay, really importantly, the critical thing is we are currently, and we announced it in March, we haven't closed it yet, we're hoping to close it now, closing the first phase of a 2-phase equity raise, where Teck is putting $2 in for every $1 we raise in the public market, concurrent with restructuring some expensive debt streams and royalties that we've had to take on in the business. That hopefully in the next 24 hours will close, and you'll see all that in the public market. I'd love to say that's us fully funded to production. It isn't. We wanted to go out and raise $20 million in the market, but we could only get just over 10. So we'll have to go back to the market again before the end of the year. Our project's currently 68% complete. By the end of the year, it'll be north of 90. And the next chunk of money coming in, and we want it to be equity, is really working capital that will get us over the finishing line. So if you're interested in it, it's the pre-production to production value creating catalyst that you're going to test us on.
The re-rate to commercial production.
Yes, sir. That's what we're going to do.
Okay, great. Richard, thank you,
you.
sir.
All right.
Thank you for taking the stage. Thanks, everyone.